Good afternoon, ladies and gentlemen. I, Vaishnavi,
And I, Atul.
the students of PGDM at National Insurance Academy are honored to take you forward to the third and final panel discussion of the day, where we shall delve into the theme, the distribution renaissance, digital ecosystems and the future of product delivery in insurance. The discussion will be moderated by Mr. Amit Roy, PwC India. Accompanying him, we have our distinguished panelist, Mr. Animesh Das, ACO General Insurance, Mr. Prerak Sethi, RIA Insurance, Mr. Sumit Ramani, ProtectMeWell.com, Mr. Mahavir Chopra, Beshak.org, and Mr. Mohammad Anzi, Guidewire India. Thank you for forming the dais. Before you take over, kindly allow us to present a brief introduction of you to our audience.
Ladies and gentlemen, we have the moderator for the panel, Mr. Amit Roy, partner and leader for insurance and allied businesses at PwC India. Mr. Roy has over 3 decades of experience across 3 distinct sectors: consulting, insurance, and Department of Revenue for Government of India. Sir has worked across distribution management, customer relationship management, and establishing new business models for insurance organizations. Sir is an alumnus of the Indian School of Business, Hyderabad, where he completed his postgraduate program in business administration and general management.
It is my privilege to introduce our esteemed panelists now. Mr. Animesh Das, MD and CEO at ACO General Insurance. Mr. Das is a founding member and the Chief Underwriting Officer at ACO. With over a decade of experience, Sir has been instrumental in shaping the company's trajectory by defining its profitability charter and product strategy. Sir is a key architect behind ACO's development and a true leader in the digital insurance landscape. His leadership journey began in the strategy team at ICICI Lombard and later progressed at CoverFox. Sir is an alumnus of IIT Kharagpur, where he completed his Bachelor's of Technology.
I feel honored to welcome our next distinguished speaker, Mr. Prerak Sethi, founder of RIA Insurance and co-founder of the India InsurTech Association. Mr. Sethi is the founder of RIA, a vertical AI company that is modernizing insurance and healthcare with advanced automation and data-driven decision systems. Sir has over a decade of experience in the InsurTech space in the area of insurance distribution, product design, and use of technology within the insurance sector. Sir is also a co-founder of the India InsurTech Association and advises multiple InsurTech startups. Mr. Sethi also serves on the Standing Committee for Insurance at IFSCA. Sir holds a computer engineering degree from the University of Michigan and an MBA in Finance and Entrepreneurship from the Kellogg School of Management.
Carrying the panel introductions forward, I feel honored to welcome our next distinguished speaker, Mr. Sumit Ramani, co-founder and actuary at ProtectMeWell.com. Mr. Ramani, a distinguished actuary, heads Protect Me Well, a B2B insurtech SaaS platform helping financial institutions provide unbiased and scientific guidance on insurance and investment products. Sir also heads Actuaria, an actuarial consulting firm that has supported over 100 clients across 5 continents and 20 different countries. Mr. Ramani is a fellow of both the Institute of Actuaries of India and the Institute and Faculty of Actuaries UK. Sir has published his first book, Ring of Fire, a personal finance book filled with powerful, life-changing stories. Sir also holds a BTech in Information and Communication Technology from Dhirubhai Ambani University.
Our next esteemed speaker is Mr. Mahavir Chopra, founder of Beshak.org, a chartered accountant who found his true calling in the insurance sector. Mr. Chopra leads Beshak.org, an independent, research-driven platform dedicated to helping individuals cut through the fine print and better understand insurance. Mr. Chopra has spent nearly 2 decades reshaping how Indians buy and experience health and term insurance. His career spans impactful roles at EY, Piramal, and Marsh, after which Sir became one of the founding members and the Chief Business Officer at CoverFox. Over the years, Mr. Chopra has emerged as one of the most trusted voices in the industry. His insights are widely sought after and frequently featured in leading media such as Economic Times, Mint, and CNBC.
Our next esteemed speaker is Mr. Mohammad Anzi, the Vice President of Engineering and Managing Director of Guidewire India. Mr. Anzi leads operations as well as engineering execution in Guidewire's development centers across Bangalore and Chennai. Before joining Guidewire, Mr. Anzi served as the Chief Operating Officer of SAP Labs India. During his journey at SAP, Mr. Anzi held leadership roles across development, consulting, entrepreneurship, and strategic management. His strong focus on execution excellence played a key role in SAP's expansion in India. Recognized as an respected voice in the software industry, Mr. Anzi has been an active participant in business and technology forums as well as an inspirational thought leader on driving open innovation ecosystems. Sir holds a B.Tech from NIT Calicut and an MBA from IIM Kozhikode.
I now invite my colleagues to kindly come forward and present a bouquet as a gesture of warm welcome to our esteemed panel. I now kindly request Mr. Amit Roy to commence the discussion. If time permits, the panel will also take questions from the audience towards the end of the session. Sir, over to you.
Sure. Thank you. Good evening, everyone. And rarely I have seen the third panel getting so much of an audience. And talk about distribution, which is very close to my heart. I'm delighted and I congratulate all of you to be here attentive and listening to the conversation. I think here in terms of whatever we would be discussing for next about an hour or so would be a lot to do with which is immediate and contextual. And before we start the discussion, I'd like to tell you that about a couple of weeks back, I represented PricewaterhouseCoopers in a global forum, and I was feeling incredibly patriotic and proud for the fact that about a decade back when I would go in such conferences, Indian colleagues and including me, we would actually look forward to what is happening elsewhere in the other parts of the world. And lo behold, in this particular financial services working week, as we call it, entire world was actually chasing Indian partners of PwC to learn about what is happening exciting in the financial services of India. So I think we should give a big hands to the country and congratulations to all of you for making that happen. I think primarily if you see in the flux of the thing which is happening. India is actually at a tipping point in terms of innovations. And when I look around the world, at least I would not comment on the larger financial services canvas because that's too big. Let me limit my conversation into insurance. I think the amount of innovations and the amount of initiatives that has been taken in last about a decade or so in Indian insurance is incredibly high, and most of them are very successful. Gone are the days when you talk about distribution and what would be the first thing that comes to my mind or any of yours mind when you talk about insurance distribution. Come on, you can be engaging. One word that comes for distribution from any of you. Say that again, a little louder. Yeah. I think distribution was only agent. Distribution was very rarely in India corporate agency or broking, but other than that, distribution really did not see much of innovation. In fact, interesting, couple of decades back when insurance was done with privatization, the amount of money that flew into distribution was unheard of. And possibly that was right because at that point of a time, India needed to grow on distribution. Number of agents, number of corporate agency, broking, all of that, people were making money. There used to be a lot of foreign trips, there used to be a lot of incentives, people were earning, all happy situation. So much was the focus that the persons who were contributing money was probably forgotten, and it kind of hit back the industry very badly. And I am talking about, come on, you have to be engaging. I am talking about customers, of course. I think when the financial crisis hit the country and we took another gear shift, which is making the industry robust with data, with technology, and with lot of governance and regulations around how responsible businesses should behave. And with that, I would like to actually start the discussion today. And none other than Prerak, actually, who has seen this industry very, very closely. When you look at the history of how distribution to technology to now customer experience, which is the great driving factor, what are the new age distribution model that comes to your mind?
Thanks, Amit. Amit, historically, my family business is also an insurance broker. So I've seen distribution very closely and upfront. And from having that family broker starting about 23 odd years ago to the classic form of distribution, from an insurtech standpoint, the first wave of partners that came up, including, say, a Policy Bazaar, and there were a number of players back in the day, they focused on digitizing distribution, taking it online, lead generation through online. Then subsequently, starting in the year, say, 2019, and especially during COVID, we saw a second set of insurtech players come up who were looking at distribution very differently. First, there were a set of players that were looking at the employee benefit space, and they said that the classic group health experience, group term life experience has not been good for the corporate or the employees. So how do we actually build journeys that are simple for a corporate to be able to onboard their employees, team members, be able to provide them with covers, provide them with top-up covers, worksite models that got introduced as a part of this mix. As a part of employee benefits, also help them provide them with wellness products was the next proposition that came up. So one set of insurtechs came up there. Second was a set of insurtechs that came up in embedded insurance. So with this idea to say, hey, at the point of sale, motor insurance being the classic concept, how do we engage that out to mobile phones, how do we car warranties, any gadget that we are selling, how do we add embedded covers? Ola was a great example of the 1 rupee, the IRCTC example that came up. So these are all the old waves. Maybe the question should be what else, what forward for us? One of the most interesting spaces that is underpenetrated in India today is actually SME insurance. So if we look at small and medium enterprises, they require a significant disruption in terms of distribution and how they need to get distributed to. So if we look at this from a distributor's viewpoint, the fire premium for a small shop is too small for them to make enough adequate margin. So they require technology more than ever to be able to onboard millions of shops in India, millions of small businesses in India with the right kind of cover. If you look at the journeys, the underwriting proposal forms today for these small enterprises are very complicated. They're very hard to fill. A lot of these small enterprises, because the nature of the business, don't have the data. So when they look at a form, they say, I don't even have this data. How do I fill out this proposal form? So the next set of distribution innovation that will come for the next 2 to 3 years should ideally come from InsurTech's focus on small and medium enterprises.
Animesh, quick one. And possibly after that, I would like to show you something like a quick 5-minute presentation on the distribution landscape that I thought today we'll be discussing about. But before that, I wanted to have a quick shot. When you think of the distribution renaissance, which is the topic today, what are the top 2-3 things that comes to your mind?
I'll maybe share across a different viewpoint on this. Half of the time when we think about distribution, we think about what kind of licenses. It's a broker license, agent license. I at least personally have learned this, and I apply this lens almost 100% of the time when we get into solving any problem, is simply keeping the customer viewpoint in mind, right? So from a customer point of view, and to start with, I'm just taking a customer who is looking to buy insurance or protection for their own need. For them, they don't understand how different distributions are there. Right? Wherever they'll be able to find the right protection, the right fit for themselves or their family or their asset, that works. Now it's our duty as an ecosystem, insurance ecosystem, that how can you make it more affordable, easier for them to adopt. So if I take a very simple lens, we can cover the SMEs or enterprise separately, but if I take a very simple lens from a consumer point of view, all of us have family, and when we think about protection, we think about that I have asset, I have home, I have car, I have two-wheelers or something, then I have my family health or financial protection, where health insurance comes out to be one of the tools, and then you have life insurance. And this is like roughly what, like a 60,000-70,000 budget for a family in a year. I'll buy these 3-4 coverages, I'll buy health or life and all. What I'm looking for is there a place where I can trust investing that money upfront and have high trust that they are going to pay me back when there's a need. So for me as a consumer, effectively, whoever will advise me, help me out to find out that place where or the destination where I can go and buy a product from, and at the same time, make sure or pass me that trust that your money will get back. So I'll take the consumer lens and I'll say, whoever helps me to find it out or convince me that this is the place I'll buy that peace of mind. I think that's the distribution from a consumer point of view.
Wow, great perspective. Sumit, what is the quick commerce of insurance distribution? Anything very similar that comes to your mind?
Sorry, can you come again?
Quick commerce.
Quick commerce.
Quick commerce.
So maybe there's no quick commerce in insurance, because
Correct.
what we're looking for is something which is long term, should be done with deliberate intention. But if we get into that, right? So maybe some of the things that I've seen playing out is around hyper personalization.
Wow.
Yeah, which I think should come quite naturally. If I address you as Amit, you naturally feel, okay, someone is referring to me by name. I can trust this guy, right? If we do, and hyper-personalization should not be just be confined to, let's say, only the product, but also the advisory, and also the communication. So if we do that, it's very, very easy to sell any product, right? And to that extent, the sales cycle is shortened. And if you could call that quick commerce, maybe yes. The second part, of course, is cross-selling. If you have found a customer who has already placed trust in you, why don't you go ahead and buy more products to him, right? If you think about an individual, even if I look at from protection lens, there are 7 or 8 products that I would need. Term insurance, medical insurance, home insurance, motor insurance. I need to build my retirement corpus. I also need to have, let's say, critical insurance. And if for more evolved customers, I would probably need cyber insurance, right? So the same customer needs 7, 8 products, but on an average, an insurance company sells 1.2 to 1.5 products per customer. So that's probably another area.
Excellent.
Yeah.
Can I just add, because I think it's a very interesting question. So when you stated that question to Sumit, I was really thinking what could be a quick commerce version for insurance distribution. And maybe there would be a need, right, of you being able to click and getting to an agent and getting advice in 10 minutes for whatever you read, right? Whether it's a point of distribution or a point of claim or simple service questions. Now, it's all possible today already. Is it done? Not in the way in which our customers expect it to be done. And obviously, our expectations are down to having something delivered in 10 minutes. It's happening with urban companies started with saying, hey, you'll have a cleaning lady at your house in 10 minutes flat. There are companies that are giving plumbers to you in 10 minutes flat. So that 10-minute promise in insurance might be a one for all of us to aspire towards, right? 10 minutes for any advice you need on your insurance policy.
I love that. I love that. Yeah, I'll come to you. I'll come to you. And Z, any thoughts on quick commerce of insurance?
I think almost a month back, we had a huge discussion with Pramod, Dr. Patnaik sir, and all of us. For me, I think ultimately what matters is if I'm able to pick up an insurance through WhatsApp, very simplified engagement, and I think that's when you ideally deconstruct the kind of hierarchies and the setup that you have, right? We are still not there. There is so much of different actors involved in the entire value chain, but there is a huge, huge opportunity for us to simplify the entire value chain and so make it accessible and affordable for the people. From a product, I come from a product and engineering background. We are doing tremendous amount of stuff in terms of product designing and making it available. Things which used to take 6 to 8 months in the past, we can do it in a 60 minutes time in terms of product design, understand the consumers, understand the customer segmentation. So from a tech perspective, we have enabled, but from a process perspective, from how we are modeling the product, there is still a large opportunity at hand. That's what I kind of feel.
In our generation, quick commerce was actually very different. And allow me to say this in Hindi. And it was very popular one that आज करे सो कल करे सो परसों इतना क्यों जल्दी करे जब जीना है 100 वर्षों. So in our generation, actually, quick commerce was reverse, right? I don't know why the young ones are clapping for this. Interesting. So Mahavir ji, जीना है 100 वर्षों तो इतना quick, immediate simplification ये सब क्यों चाहिए?
Yeah, so the insights that I have from talking to customers, and we are a company that has a lot of interactions with customers because we work as an independent voice a lot of times because of the work that we do. And my insight has been that customers are not looking for quick insurance. They're actually looking for insurance that works, right? So it actually, even if it takes a day or two for a person to get the right policy, they are going to be more interested in that compared to basically, getting a policy in 5 minutes, which they cannot understand. There have been so many times in the past, in my career, that we've seen in our experience where we've written copies which says that buy insurance in 5 minutes. It actually does not work that much, right? As much as you solve for the trust problem. And I think all of us, whenever we've spoken about, we've spoken about trust as the key word in the entire discussion. So how I look at all this is that quick insurance purchase and solving for distribution and the renaissance that we're talking about can only be solved when we actually solve for the crux of the problem, which is trust, right? Once we solve for the trust problem, that's where you'll see the renaissance actually happening, right? And I'm really happy that everyone who spoke here actually has ended up speaking about trust.
Great point. Great point indeed. So, ladies and gentlemen, I had a job to do, which is the theme presentation, and I consciously wanted to do after I have the first round of interaction with all of you. So, if you allow for 5 minutes, I wanted to show you a few slides. I was actually checking myself when I was, telling my team to prepare the slides, and I was traveling. So, actually, the team created the slides with some inputs from my side. I wanted to validate that I'll be talking to, intelligent brains who are actually very closely connected with the industry. So how much of that matches? So next 5 minutes, let's go through the slides quickly and how much of that matches we'll see. Can we have the slides, please? Sure. It will come on the screen? Yeah. So basically, you know, we are looking at 7 different aspects, and there's no reason why it is 7, but I thought lucky 7. So, you know, I believe in my childhood anecdotes, so the 7 points are there. And if you go through them, this is something very similar to what we have heard. And I'll not spend more than 5 minutes in some of the slides which should actually, you know, relate to something that all of them actually said. If you talk about the shift which is happening to the industry and why it is happening, it's largely because of the build-up of intelligence. And why so much of embedment? Why so much of integration? Because I think gone are the days when manufacturers can drive insurance, or even the distributors can drive insurance. I think most of you spoke about trust. The trust factor comes from the consumer. So today, the real honor of everything and the control of everything is in the hands of the customer. So how the ecosystem is changing? If you talk about that, so there's a set of owners who are actually owning the ecosystem. There's a set of partners who are having the ecosystem, and there's a set of participants who are actually leveraging through ecosystem. Carefully look at the lower part of the slide, and can you identify the company number 2, which is actually doing a dynamic pricing and offering optimization? Can you identify the business? And somebody who is actually sitting here, Animesh's company, does this. And this is very unique. And this is what I think Sumit was referring to, that today the consumer is wanting something which is optimization, something which is hyper-personalization. I recall that you mentioned that. I kind of agree, and I kind of captured that. If you talk about how India is buying, Mahaviji, you said that thing, and I think we have been hearing from multiple of you. Look at the score that is coming from trust. And this is not something that Amit is saying. This is of an ethnography study that we ran across the country in terms of when Indians buy insurance, what is paramount in their mind. Surprisingly, it's not price. So India is a price-sensitive country, but when it comes for insurance, trust is the premier thing in the mind of people. I know this is very busy slide. Allow me to talk about a little, and I'll really talk very little about it. Largely this is saying, probably for the first time, and I started with this, that the country is going through a organized ecosystem economy when it comes to insurance. And I'm very proud of the fact that India is definitely leading this particular renaissance in terms of making the digitization of distribution very strong and smart. Bima Sugam, I'm sure since the morning you would have heard this for a long time, is probably the defining moment. And I was talking to the Bima Sugam authorities, I was talking to IRDA people, the kind of interest that I see in the mind of this. And remember, entire Bima Sugam is all about, you have to talk, all about whom? Is Bima Sugam for manufacturers? So end of the day, India probably has taken the first step in terms of creating something which is nationally owned by all the insurance companies. Because all insurance companies are investors there. That's something very unique, and for this particular thing, I think the regulators deserve a clap, that Bima Sugam is extremely unique. Nowhere in the world you have anything which is on open architecture, which is absolutely integrated, which will leverage each and every data, which will create transparency, which will make it very simple and effective for the consumers. Now, what is a new playbook look like? And I will probably spend about 30 seconds in this, and understand this ecosystem is just illustrative. I know this is a naughty question. How many of you use dating app? Anybody in the room who has used a dating app? I know there are murmurs. Now India is a funny country. We do everything but we do secretly. The point that I am saying is that we did a survey in US. The most interesting embedded insurance which is now evolving in US is insurance on dating, right? India probably will see that, but India is not far behind. Something which is taking up, and probably Animesh will talk about it a lot more. India is taking up on pet insurance. Yeah, yes. So I'm expecting Animesh to come up with a dating insurance also very soon for all our Indian young friends. Animesh, you are getting popular. Now how the digital adoption is going? Well, the digital adoption has become something like a must-have. Probably 10 years back, it was something like your living room curio. You have a digital adoption, you are fine with that. All that is gone. I still recall 2016, one of the GI company actually painted the entire city of Mumbai saying that they will settle cashless claims within 2 hours. Right? It was 2016. 10 years down the line, if you don't sell cashless insurances within 2 hours, you can't function. Right? You have to shut your shop. So I think digitally, we are the most active country now. We have NCPI, we have Aadhaar, we have great things happening for this country. So I think what I really look for is something which is the strategic transforming distribution. And there, my humble appeal to each and every young students of NIA is that look out for distribution as a profession. I know when it comes for placement, maximum hands will go for things which are related to operation, things which are related to finance, things related to actuarial and all of that. Very few people get interested about distribution. Mark my word for it, next 10 years, the most exciting thing will be around distribution because distribution is getting productized. For the first time, in each and every business schools, the case competitions are on how you can reimagine the distribution. So I think distribution as a landscape will offer you some very interesting thing. Now finally, if you talk about the Vision 2047, there's a digital India, of course, but probably in this digital India, like we all mentioned, two things will have to work. One is affordability, second is awareness. Double A, and I say double A has to lead with trust, which is T. Thank you very much. That was the theme presentation and I go back to the discussion. Thanks. Mahviji, in that backdrop, I'll come to you and I'll come to Animesh for dating insurance a little later.
Sure.
How much of this is relevant to you? Do you think, because you have seen the market probably better than anyone else. You have seen also the journey of how the consumers have changed and the expectations have changed. Now in this world, how much of control the distributor is actually having on consumer post sales?
I think if I've understood your question right, your question is how much is the distributor involved in the post-sale side of the story with the customer?
Yeah.
I think over the period of time, meaning if I look at a journey of, let's say, 10 years from now, meaning which is, let's say, we're talking about 2015 to 2025, I think customers are making distributors accountable for the services that they need to offer after the purchase of the policy. So typically, you'll see that most large distributors have started very actively talking about claim service, post-sale service in their ads, in their websites, everywhere, right? Which basically is a good reflection of what the customer is actually asking for, right? Essentially, insurance as a product is post-sales, right? Meaning when you buy the product, you are just getting a PDF most of the times. and the real fulfillment is happening when a claim happens. So I think it's very natural for a customer to be expecting that, and it's very important for the industry to actually deliver that, meaning it could be the insurance company directly delivering it like how ACO does it, or it could be through a distributor who's taking the accountability instead of the manufacturer. But of course, meaning I feel like we've been talking about trust, and I continue talking about it. If you have to solve for trust, the accountability on the distributor only has to increase, both from the distributor's end, from the industry's end, and also from the regulator's end.
Agree. Anzi, you would have seen the landscape, you know, in your earlier profile, that the entire finance landscape of insurance was all about how you manage the commission, right? And right now, like we discussed, and I think we started with some of the inputs, and many of them actually tallied with whatever the team prepared. So what do you think should be the focus in terms of if you are creating something which is a landscape where you want something which is digitally driven and not only distributor driven? So what are the key changes that you would have in mind in terms of imagining that? And I know that, you know, on PNC side, Guidewire is one of the best ERPs. And I have also heard that it dramatically improves the combined ratio and stuff like that. So anything from there, you know, if you have to set up something for India, what should be the driving factor, the top 2-3 things that you would like to consider?
I think the core problem the industry faces is also very diverse set of data sets, diverse set of systems. And I have personally seen some of the installations where you have specific software for claims, then you have something for policy, then you have something else for...
You guys can hear him?
Yeah, can you hear me?
Now,
Yeah. So it's a very diverse landscape that we are looking at, right? I mean, you see a very siloed approach in terms of solutioning. You have different systems available for each of your functions. And in between, you have hundreds of Excel files flying around, right? I think if you really look at from an industry perspective, I think this is something that probably we need to address first, because unless you have a common semantic layer and a data fabric below it, you will not be able to create insights out of it. You will not be able to create run any kind of large language models to create new products or new services. I think that's the first problem we need to target. I mean, that doesn't mean that everyone has to buy our software, but rather you need to have a clear data strategy from a delivery perspective, and you probably need to design products having that data in focus. I have seen many places this fails completely. They have diverse optics running on different data sets, and ultimately they were not able to really create a digital product out of it. I think that's the first thing that I have seen. The second part, we have seen many organizations coming forward and leveraging AI to create new products. But something which I have seen recently big time is that our Gen AI is kind of super hyped up on the impact in short term, but really underhyped the long-term impact, right? So what we are doing internally is also, we are trying to infuse AI capabilities in every application that we have built. And we are also shifting from an application mindset to a platform mindset.
That's what Prerak was also.
Yeah. So we are shifting to that. So ultimately what we believe is that the insurance companies, the end users, they know how to run the business better than us. So let them create the apps. We extend the platform. They can create different applications using low-code, no-code platforms, or any micro applications, consuming multiple APIs from different aggregators. I think we leave that to the insurance companies and the end users to define. So again, two things. One, have a common data strategy. Second is shifting from a product mindset to a larger platform mindset is extremely needed. Yeah,
that's a great point. Animesh, curious that while we are talking about distribution, you and your business actually challenge that and redefine distribution from the consumer lens. And way back in 2018, I still recall that most of the people in the industry disbelieved, and they thought that business will not take off. So what are the 3-4 things that you did differently, which was like redefining distribution, that we would like to know.
So, like I said, I think distribution is not just a license in between. We do work with partners. End of the day, our thought process is simple. If you're able to create value for the end consumer, even if you have someone in between, doesn't matter. You should be able to create value for the end user, and there'll be enough traction already, right? So we have embedded. So distribution can be technology-led, distribution can be advisory-led, distribution can be any embedded ecosystem, right? So all these are possible distribution possibilities. The only thing which you need to solve for is that end consumer should get the benefit out of it. Because even if you have very strong captive distribution medium also, it will not guarantee you profitability, it will not guarantee you high customer engagement, it will not guarantee you any success unless the end user is getting a benefit. So I think that's one. I just wanted to add a couple of more points. I'll share our experience. Before that, I'm just giving one insight on the quick commerce point which you said, right? So one is from a quick commerce point of view, I think, and this quick commerce in a fair way got introduced in this decade only, right? It was not there in any segment in the previous decade, right? It's as young as COVID was, right? And quick commerce doesn't work across, right? Like we think about any product, if there's a need from a consumer point of view that I want groceries in 10 minutes, there quick commerce work. But if I want to buy an electronic item, while there are enough social media posts that people end up buying an iPhone quickly, but it's not needed. Like a few of us mentioned, that's not needed, right? Insurance goes in the same line, that if I'm buying a long-term trusted product, I don't want to buy it in 10 minutes. But where quick commerce can be applied as an ecosystem from an insurance segment point of view, and taking a cue from what Mahavir said, see, end of the day, when you buy a physical product, you realize the product as soon as you get it. Insurance is that unique product where the realization happens when there's a claim. So buying a product, effectively you're getting a piece of paper where there's some promise written, right? You're not getting any physical product. You get the product when there's a claim. So that's where the quick commerce should apply. The claim should be in 10 minutes.
Amazing,
right?
amazing.
Instead of the distribution.
Yeah, amazing, amazing point. And, I wanted to know from the actuary that quick commerce of claims, and I'm so glad that we had the same on the slide also in terms of 3 different ecosystems and where the quick commerce game. So how do you price it? I mean, in terms of if I have to settle claims, and I mentioned about 2 hours cashless and everything today, I mean, somehow the trust that Mahaviji you mentioned, it's really lacking, and it's like the survey says that 65% of the providers do not trust each other in terms of the claim situation. So how do you price it and how do you make it tangible?
If the intention is to pay the claim. If you are eventually going to pay the claim or settle the claim, right? Whether you settle in 2 hours or 2 days, the price doesn't change. The customer experience does change abundantly. And I was sharing this with Animesh.
Just to clarify, the reason I am saying that in 2 hours you may not have so much of due diligence.
Yeah.
Just for customer experience, you are so. I am sure that he will factor some price for risk, fraud, and all of that. So how do you navigate? That's the question.
So yeah, you of course start with building the margin because you know that there could be element of fraud, but eventually you should move towards, can I get additional source of data, maybe not directly from the customer, to be able to say that, okay, this guy is not a fraud, right? Can I look at his CIBIL score? Can I look at his entries, which are probably available in account aggregator, and say, okay, this guy doesn't look like someone committing a fraud. If someone has, let's say, a social media profile for 10 years, has, let's say, 1 lakh followers on Twitter, unlikely to be a fraud. So can I look at other sources to be able to say whether this guy is fraud or not, and whether should I price additional for it. Up until that time, you start by loading the premiums to see how things pan out. But that's one point. But the other point to also look at is once you have quick settlement, customer who's happy, you'll be able to sell more. And that should also be priced in somewhere.
Priya, since we are talking about distribution, we spoke about trust and all of that. So one of the very common refrain, and so much of AI since morning, I am sure we would have discussed a lot of AI also. I mean, without blinking my eye, I can imagine and I can guess anybody sitting in the room who has a health insurance whose premium has gone down because of intervention of AI. Premium has gone down, I am saying. So AI, you know, why should it mean anything for the customer, and where do you leverage the trust part of it with AI and all of that, and do you think that distribution really can leverage out of that? Because we discussed something around that, and that's a debate which is going on, right?
Actually, I'm a big fan of technology and AI. So let me start by caveating that.
I mean, that's why I'm putting you on spot for that.
No. So let me turn around and say, how many of you are using AI for personal productivity? ChatGPT, Perplexity, Grok. See, all the students, everybody is up. For anybody who's already working in industry, how many of you are using it for work productivity? Like in your teams, you have coding co-pilots, product co-pilots, anything at all? How many? Okay, so some teams are using it. So the question of whether we should use AI or not use AI is not really a question. It's a generational tech transformation. It's like the search engine, it's like the internet, it's like the smartphone. So in 3 years from now, everyone in this room will be using AI, right? Even if they're not today. So we should all embrace it. Now, what it actually means for the insurance industry is twofold. I'm actually a bigger fan of distribution of the business today and the opportunity thanks to AI versus maybe whatever 24 months ago. The reason for that, I think AI will result in significant efficiency coming to the salesperson, significant efficiency coming to the team's underwriter, the claims team member, the servicing team member. Now this is, there's a lot of noise, right? Are we going to lose jobs? Don't worry about the jobs. Think about the productivity gains that are about to come into the industry. Now, in most industries, 75% of a salesperson's time is not spent on sales. It is work on document cleaning, follow-ups, re-engaging, collecting the code, administrative time, so non-productive activities from a sales standpoint. Even if half of that is moved back into sales, that salesperson starts to become incredibly more productive, which is great for the industry, and it's great for finally what the economics of that business finally look like for everyone. That's one side of it. But AI significantly can also disrupt the customer's experience. It was interesting the question you asked, who's been able to reduce their premium thanks to AI, and you're the only one who raised a hand. So how many of you have actually tried uploading your policy and into a chat GPT and start to ask and say, what else can I buy? What covers are extra? How else can I reduce my premium? Anybody's even tried it outside of Amit here? No? You must do it.
Only two hands I can see.
Oh, the two hands, but that's it. You must do it. You'll be shocked at the results you'll start to see, right, coming out of it. I had a lease agreement I had to sign. I uploaded my last lease, my new lease draft that had come from my landlord, and within 7 minutes, I had full drafts of legal agreements that were compared and came out. So our customers who are already using ChatGPT, this audience that is already using ChatGPT, will first go to ChatGPT and check who's a good insurer. Is my current policy adequate? What are the changes that I need to make to this policy?
Superb.
How can I compare it with the other products that are available in the market? That will be the first touch point, and not Google, not a website where you will make 7 clicks anymore. So we've all got to get ready for that world, and that's why it's an amazing time to be rebuilding in distribution and insurance with an AI first approach.
No, great point, great point.
I'll just cover one quick aspect, and this is, see, we are talking about, we were just discussing this before the panel discussion. I'll rather ask the professors over here, the faculty over here. So did you see a change in your insurance premium or any other product for that matter when Microsoft got introduced or Microsoft Office got introduced in maybe 2000, 2005 or so? So there are two companies, let's say. One company who start using Microsoft Excel presentations and all to do quick analysis and all, right? They obviously will do a better job. They'll not need as many people. They'll not need as many resources to kind of create the same product or same analysis, and obviously lead to better premium, more affordable premium, more better experience for the user, right? Versus a company which is still working on pen and paper, which we can't imagine now, right? And obviously it'll be costlier because they'll need more people or need more resources, and it'll be costly operations. Now AI is, like what Prerak said, is exactly the same thing for this generation, where the technology is moving from A to B, which is way more efficient, will be better than whatever it was 20 years back, right? And on top of it is solving problem at scale, which is exponentially more useful. One of the things which Prerak just mentioned, in our case we do it. See, one of the things which AI is solving 100% today is where this large scale and humanly it's not possible to process so much data point and create a practical solution for the user. So we are today on our website, you can go and check your current product or the policy which you have. You can upload it out there and we'll tell you the summary of whether this is good enough, do you need to buy anything additional or not. It was not humanly possible to do it before. So these are the kind of things which AI has been able to unlock. It's just matter of time. It is our duty as insurance sector to tap into that fully as quickly as possible, not wait for it, and give these results to the customer. It will not happen overnight, it will not happen in 1 year. Most of these technologies are also almost weekly basis evolving. So we have to catch up to that, we have to be proactive and be ready what's coming in.
Yeah, can't agree more on
Amit,
that. Can't agree more on that. Great points. Mahaviji,
Amit, can I build on that?
Sorry,
actually?
yeah, sure.
So if you look at it, so one of the examples that we have seen in our case is one of our clients is running Instagram ads, asking their customers to upload their existing health insurance policy. It runs through ChatGPT, extracts meaningful information, sends this to our API. In response, we send them what should be their size of cover across the products. And they're able to generate leads out of it. This is efficiency gain, and which would eventually lead to reduction in premium over a period of time. AI, on the other hand, would also be used to have a more customized, curated journey for the end customer. You still need inputs that are required to fetch premium. You still need inputs that are required to do underwriting. But how do you get from point A to point B could be very different. For someone, it could be asking questions in Marathi. Someone, it could be someone filling the form. Someone could just be talking to Alexa and doing that, right? But you still need to know what is your age, what is your gender, and so on and so forth.
Absolutely. So my question to you was, there has been a debate of late in terms of the contra view of whatever that we are discussing. Should insurance commission come down drastically? And should insurance distributor have a role at all in terms of promoting insurance? Those are the debates going on. What are your thoughts? Where do you think that distributors add value?
Right. Why do you need a distributor, right? Meaning, one is obviously access. Access is solved through technology today. But there is also the other problem with insurance, which is largely related to complexity, right? We just spoke right now about how AI can solve for so many things. It can also solve for complexity. How can it solve for complexity? It basically, if you look at the biggest hurdle, and this is something again we discussed some time back when we were off the panel, is that the biggest hurdle for complexity in India in insurance is largely fraud, right? And fraud can largely be solved by using AI to completely understand the personal score of an individual who's buying the policy and making a claim, right? Once you're able to do that, right, your experience of buying the policy has significantly got simplified. You have a simpler product because the product now does not have those kind of complexities that it had earlier, because you've been able to control fraud through the personalized, through the personal scores that you create. And the second is basically that the pricing can go down and so many other things can happen, right? As soon as that happens, right, today I speak to so many insurance intermediaries on a regular basis. Largely the reason why the commissions are high today is because the effort is also high. Explaining the product is very complicated. Even if I don't have, I'm not a distributor and I'm a manufacturer. Even if I have my own call center, which let's say would be the case with a company like ACO, the cost of selling today is in itself very high because of the complexity, because of the trust not getting solved through that entire journey that is created, where if I have a great personal score, I am assured that my claim is going to get paid because I bought it right, right? So once that happens, definitely commissions will go down and distributors will welcome it because your conversions will go up. Your volume of business will go up. The number of customers and the relationships that you create will go up.
So a counter view to that, I used to be a LIC branch manager myself, and I still recall that LIC agents used to actually go and collect checks, you know. Renewal commission was justified. Today when I talk to the industry stalwarts, 99% of the renewals come on their own. Standing order, you know, and stuff like that. And rarely, very rarely, you know, some of the, maybe the top LIC agents who are corporate club or a chairman club would go. Do you still justify renewal commission? 5-7% is a lot of money.
But sir, renewal is not solved for in at least the life insurance space that you're saying. I feel commissions should actually be spread out, and the front-ended commission that insurance agents are getting actually should be reduced, and they should get commissions for the future years, so that, you know, the persistency problem that the life insurance industry has today, where after 5 years customers drop off and there is something called lapsation profits, which is then used to give commissions to distributors, can actually, that entire vicious circle can go down if you actually solve for that incentive that currently is missing, right?
Yeah.
I'll again draw up a simple parallel with which we can connect, right? Today, I think if you are comparing a flight on any platform, you see a convenience fee over there and you're ready to pay it, whatever it is, 400, 500 bucks something, because assuming it's a genuine convenience, because in one place you are seeing 10 things and you are taking the decision easily, right? And you're trusting that this is, all the details are out there, the booking is happening, everything is smooth. So you are getting that convenience and you're paying that fee. So end of the day, the commission by default, like I'm just saying, very first principle should be linked to the value add or the convenience which is out there, right, which someone is offering. Now you can do those financial jugglery in terms of whether you want to give it in the first year or later year and all, but it depends on what value add it's delivering, right? If there's a renewal problem straight line, like what Mahavir mentioned, the persistency going high, it is right for the consumer to actually renew their policy throughout as long as possible for them, or till it makes sense, that convenience fee should go to the distributor, 100%, right? Where there's an inherent problem if the distribution fee or let's say a commission is going up, which means the industry at a larger level is not getting efficient, or it is becoming costlier to pass on that convenience for the user, right? It's becoming costlier, which is inherently incorrect. The industry is supposed to get optimized. It should solve for these things with new technology coming in. The affordability should be easier. The affordability should happen out there for the user. So somewhere there's a financial jugglery versus creating that convenience for the user. I think that we should apply a very different lens to it. Otherwise the financial lens is, if I own the customer, I'll charge more. That's more like a pricing power, right? Which is very different.
Hostage kind of a situation. So Anji, coming to you in terms of all these things, you know, somewhere the glamour in insurance distribution is not there. I don't think anyone sitting out here would tell the kids that you become life insurance or general insurance seller. And that's the irony of this country. You know, when I look at other countries, you know, actually distributors are respected. Insurance distributors are really, really respected. Here it is not. So any quick answer, we are on the top of the hour.
I think, again, I come back to my core premise that I think if you really look at the insurance penetration, we are close to 3.3, 3.4% in India, right? So we haven't changed the entire process, the structure in which we access information. So again, 2 months back, I had to actually take a term insurance, and I kind of approached a new gen insurance company to create a package for me, and everything was done. Then I realized that that's just a skin. Back end was processed by an insurance company. Then I had to go through the multiple process. Some of the processes are paper processes, and I had to sign forms. Again, at the clinic, it was a completely different experience, right? Things have completely changed. There are health screening services like Neura.ai, which is available in India, multiple places, where they do a low intensity, full body CT, and out of that you can actually look at whether you are prone to many of the diseases, and package the insurance in a specific way, right? That customization or hyper personalization is still not there in the industry. We go through the same set of 17 different tests, and then you package some insurance and sell it. So my core philosophy or the perspective that I would like to share is that while all of us would like to reduce the intermediaries, the transaction fees across the layers, we haven't really thought about deconsidering the entire product itself and making it affordable for all of us, right? I mean, because if the total penetration is only 3.3 or 3.4% in India, there is significantly 95% out there who are still do not have access to these insurances, right? I think the model should be that make it affordable, make it scalable, and we have on our side tech as a huge enabler. Probably selling insurance through UPI platforms would be a great leverage, right? Because 65 or 68% of our transactions happens through UPI, and how many of us are actually selling micro insurance through UPI platform is still not there, right? So again, all of us need to go into a mindset where the consumption or again of these insurance should be really different from the past, yeah.
Great points. I know it's been a long day for all of you, and we are on top of the hour. I know that fascinating discussion, and can't thank the panelists more, because trust me, whatever I circulated to them in terms of illustrative points, we discussed something very different. And it always happens like that. So big hands for the panelists for being so candid and open to all of us. I can't thank NIA enough for giving us this opportunity to discuss something which is very, very close to my heart, which is distribution. And I'm incorrigibly optimistic that distribution will definitely take this country for maybe much before 2047 for universal coverage. Thank you very much. Have a lovely evening ahead. I thought it's a long day, so anybody, yeah. Any questions from anyone? I think, okay. Oh God, I thought that there won't be questions. So, okay, please give him the mic.
Hi, I am Shahbaz Ahmed.
Sumit, you can answer. Yeah.
I'm Shahbaz Ahmed from Cape Gemini Invent. So in the Indian context, when we see, it is still hybrid in nature, and most of the processes are paper-based as well. So when we think of advent of hyper-personalization or personalized offerings via embedded insurance, so how do you provide a uniform service to all customers for multiple touch points, or I would say multiple channels, when hyper-personalization is going via embedded insurance for a particular channel, if you may say D2C channel? So how do we tackle the problem of giving a unified or uniform service to all traditional channel or customers who are there in the traditional channels?
Not very sure if I follow it completely. So are you saying that how do you apply hyper-personalization to embedded insurance, or how do you give similar experience to all channels?
The second point.
I think the industry is still quite evolving, and the tech adoption is still in early stages. Giving so far, and I think for maybe next few years, the industry would continue to focus on distribution and getting that right. And by distribution, I mean getting to the point when premium is collected. The processes after that are still going to evolve and take time in terms of getting those automated, because that's where the focus continues to be. But there are examples like Echo, right? I was telling this to Animesh before the panel. I bought motor insurance some time back from Echo about 5 years ago. I had a very minor accident which would have costed me about 5K or so. I first thought, why even bother claiming? It's going to be a long drawn process. Then I argued, if I don't do it, who else is going to do it, right? So then I eventually reached out. They said, okay, take a video of your car, send it to us, and then we'll process it from there, right? Within a couple of hours, they said, okay, we'll pay you X amount, and if you agree to that, it's done, right? I checked with my garage. They said, they're happy to charge me X minus, let's say, 1,000 rupees. I said, I'm making money out of here, why not do it, right? So unless someone is thinking from right from distribution to the claims as one customer experience, this would continue to be broken, right? Think of an example where you order something from Amazon, you pay money, and then 2 days later you are told that they don't service that PIN code. Right? This is where we are at this point in time. Someone has to champion the entire process and not look at only distribution, only underwriting, only claims. So once we start doing it, you would see seamless journeys across.
Thank you. I have a question. Okay, so my question is open to all the panelists who would like to contribute. So first question is, I have a couple of questions. So first question is, how do you all see the balance between the algorithmic underwriting and the human judgmental underwriting? See, I would give you the reason why I'm asking this question. So at present, if we are looking at the retail side of the insurance sector, particularly the low ticket size, high volume retail side. So the underwriting is totally dominated by AI. So 80 to 90% of underwriting is done by AI. Now, consequently, this has pushed human for the commercial and complex underwriting where the nuanced understanding and complex interpretation is required, where you have to basically capture the contextual derivatives, right? Now, as a prospective entrant to the insurance industry and on the behalf of my future underwriter colleagues, I would like to ask, how do the panel see this transition from human side of underwriting to the algorithmic underwriting and this enablement in the AI? So do this enablement in the AI would displace the human underwriters and would cause a mass layoff for the insurance industry? And second is, can generative AI, move the retail insurance sector from being reactive claim driven to predictive prevention framework? Like first what we do in claims, part of thing, that we first buy the product and then the loss happens and then the insurance industry would give us, then the company would give us the claim. Now, with the intervention of AI, can we make a system where we can predict the loss and would focus more on the preventive part? Thank you.
So first of all, very relevant questions. To like a simple thing, when you think about AI, which is artificial intelligence and human intelligence, right, that go hand in hand. I think the underlying point which you mentioned is there a possibility of mass layoff just because there's more implementation of AI, right, deeply? Has been the case, right, when internet happened, when any of the tooling happened, right, it depends on who is adopting to that technology faster. Someone has to use it still, right? Even if there's an AI, I'm sure all of us, right, all of us are not utilizing AI. There are like just a couple of hands which are raised when you're talking about their work efficiency where AI is being used, right? So we as human have to utilize the technology. It is for us to utilize. So people, as future underwriters, you should be prompt engineer also at the same time, where you understand how the prompt should be written so that your output is better. As simple as that, I'm just taking a very bad example. Someone who knows good analysis on Microsoft Excel versus Tableau versus Power BI, any of these tools, right? Obviously, these are for our human efficiency, and we have to learn these aspects to kind of utilize better, right? So it is rather an opportunity where someone who will learn these new technology will actually grab those opportunity. Mass layoff is an outcome. We'll see whether it'll happen or not, depending on it. Will rather unlock more opportunities, more surface area. I'll take a very simple example. When we started a very simple 1 rupee product with one of the cab aggregators. These were millions of transactions in a day, almost like a 10 lakh plus transaction a day. It was not happening before us. The reason we were able to do it is because we invested into large infra where the policy issuance can happen almost on a per second basis, right? That unlocked opportunity for the insurance sector to tap into that ecosystem. So AI will unlock a lot of opportunity, can also lead to more and more talent coming into the industry, better talent who is more faster adopter of these kind of technology. I think we should see it in that way. That's one. The second point, sorry, I forgot. What was the second point? I think you mentioned Gen AI, whether it will lead to predictive management. I think more Gen AI is again is a surface area. I think it is already happening. The predictive, or rather the proactive management of any kind of peril comes from a larger ecosystem management and deeper engagement with the user. Gen AI becomes one of the ways to tap into that or integrate. I think there's a lot of things which have to work. It's already happening. A lot of data feedback loop, how the distribution will operate, all of those things will lead to that capability. But it's already happening. Globally, there's so many examples where it's already happening. I think we need to catch up to that.
I think just to add, the skill is shifting. So gone are the days, if you are talking about PNC, you can stay only with motor, health, fire and marine. And lot more product evolvement is happening. And like Animesh said, that new, we call it, technical LLMs are evolving. But to train them also, a lot more opportunities are there. And we all are, you all are extremely lucky to be in a country which is already 6th largest insurance market in the world, and mark my word for it, another 5 years will possibly become 2nd largest insurance market in this world. So there will be huge demand for underwriters for sure. India is looking at adding 50 more insurance companies, lo behold. And if Insurance Amendment Act goes through, you will actually see a lot of insurance companies, regional insurance companies, composite, captive insurance companies coming up. Exciting times ahead. Be bold, be positive. Take AI as your friend. Don't feel that AI is your enemy. Yeah. That's the only one input that I am really sorry that we'll have to all rush for catching our flights. Let's point. Give it back.
If I could make one point. So, if the bigger view on the risk is risk can only be transformed, right? It can never be completely taken off. A good example is that, let's say if you have self-drive cars, once they evolve to a certain point in time, probably there would be no accidents. Then you might argue, do you need, let's say, motor insurance? You would still need insurance to cover for the risk of the algorithms malfunctioning, right? So the risk would continue to be there. It would change form and shape, and that's where AI becomes your friend and not an enemy.
Thank you for your questions. With this, we shall bring this panel discussion to a close. I thank our moderator and panelists for such an engaging discussion. We extend our heartfelt gratitude to all the experts for sharing their valuable insights. I now invite Dr. Komal Singh, Principal PGDM, to come forward and present a token of appreciation to our esteemed panel.